Now we come to one of the most important parts of bond market, the international bond market. This is also known as the external bond market, the offshore bond market, and also the euro bond market. However, in the recent times, there have been certain bonds which differ from the euro bond categorization. So that's why I've not written euro bond here. Now, the key bonds are the external bonds are issued in foreign currency. They're issued by underwriting syndicate, which is international. However, in recent times, there's also been issuance in the domestic home currency. They are outside the jurisdiction of any single country. They are unregistered bonds. Now, the global bonds is one of the major features or major innovations which happened over in the past 3-4 decades. They are issued across multiple locations and written by an international syndicate. Now, going forward, I'm going to be discussing two parts in the external bond market, which is what this bonds issued in the foreign currency, and the other one which I was talking about, bonds which can be issued in the domestic currency, in the offshore market. So when we are talking about external bond, one is when you raise capital in the foreign currency, which I talked about. Now these are this is the euro bond market. For example, you can take two examples as a euro dollar, euro yen. When a foreign actor goes to US and raises bonds in dollar, it's known as the euro dollar bonds. When a foreign actor goes and raises capital through bonds in yen, it's known as the euro yen bonds. The other bonds segment which has like really become important now, which is rising, is to raise capital in the domestic currency, which is like dim sum bonds and masala bonds. Dim sum is a delicacy in China. Now these are bonds which are issued outside the home country, but they are issued in the domestic currency. Now, one of the major differences, if you look at, is that the currency risk in dim sum and masala bonds is with the holder, so bond holder. So this is something which is very different when you go to Eurobond market, where the risk of the currency would be with the issuer. Now, when we are looking at the international bond market, the first Eurobond was released in 1963 by Autostrad in Italy. It was a $15 million issue, euro dollar issue. The first World Bank issued the first global bond, and I'm going to look this in detail. And the first corporate which issued the global bond was Matsushita Electric. It's a conglomerate in Japan. So when we look at, so now here I'm looking at the first global bond by World Bank. Now just some of the features, like when we look at the fees, which is 35 basis points. So one basis, when you're talking basis points, it's actually 0.01%, it's 0.001. So these are some of the features. Who are the lead managers? Who are the co-managers? Whether there was a negative pledge or a positive, and whether there was cross default. So when a bond is released, so this is, you have a launch date, or what is the rating of the bond. So these are some of the features. When you talk about lead managers, these are the investment bankers who have who are across involved in the whole deal cycle of the bond issuance, and co-managers assist in the outreach to the market. So when we are talking about BPS, it's known as basis points. Like I talked about, 0.001. The terms frequently used in change in yield or charges for issuing of a bond. The negative pledge, which was mentioned, was basically you have you have where you cannot allow the lenders or the issuer to mortgage or pledge more assets. This basically would hurt the credit outlook of the particular issuer. So this is some of the features or covenants which you talked about, features which you can include in bonds. So when we look at the global bond market size in China, you have to see the onshore market is by far the biggest. This is one of the most recent reports which I got. The three major actors are central government, local government, policy banks. Offshore market, which is both dim sum and in foreign currency, is much smaller. This is expected to go higher. Usually always the onshore market is much bigger than the offshore market. So to just give you a brief idea, the dim sum bond market is $52 billion, whereas the offshore foreign currency market is about $126 billion, is predominantly is in US dollars. CNH mentions that it's issued through the Hong Kong market route. Now in India, it's known as the masala bond. These are offshore bond market in India. If you go and raise the bonds in INR currency, then it's known as the masala bond. Now masala is of course after the spices which you use in Indian food or the masala tea. Other classification, one is about sustainable bonds. Sustainable bonds, green bonds, social bonds, sustainable bonds, and social impact bonds. So I've got a separate presentation on this. I suggest you go through the middle road tutorial section, and you will get the presentation on exclusive on sustainable bonds. So this is another bonds where the supranational plays are one of the biggest plays in this segment. So this is a separate classification I've brought in because they're playing an increasingly important role in the capital markets, specifically to fund SDGs, projects related to Sustainable Development Goals of United Nations. So just to give you a fair idea of how the markets were in 2019. Now, when we talk about a bond, just to give you an example, a green bond, these are bonds that are focused towards the SDGs related to climate change and climate action. Now, one of the recently AC Energy launched a $400 million, which is about 3.4 billion fixed for life green bond. This is the first time a fixed for life green bond was issued at a fixed coupon of 5.65%. So the bond was listed on it's in Singapore Stock Exchange. That's what it says. So just to give an example of how bonds are making a difference within the sustainable development sector. Now I talked about floating rate bonds. So we are talking about fixed rate where the coupons are fixed. A lot of times the coupon rate is actually linked to a reference rate. So usually it was LIBOR, but LIBOR is outgoing and it's going to be on SOFR. So I'm going to be talking about that in detail in one of the upcoming presentations. So basically in a floating rate, they are linked to a reference rate, and this rate plus a quoted margin is given. So when you're talking about floating rate notes, they are of medium duration. They are also another type of issuance which is inverse floaters. Basically, they move in opposite tandem to the interest rates. So we'll talk about that at a later date. They're also known as deferred coupon structures. So all these classification will go into depth at a later date. So when we come to a very important type of bonds, which is known as zero coupon bonds. So zero coupon bonds don't pay any coupons. They are actually issued at a discount to the face value. So the difference is between the purchase price and the redemption price. The rates of the zero coupon bond are known as spot rates. This is a very important concept. It is the building block when you go into fixed income, because you'll be doing bootstrapping. You'll be making a yield curve. When you're looking at treasuries, you make a yield curve. You take a zero coupon rate or spot rates at different types of maturity to build a yield curve. And we'll look at that also going forward. Equity, debt, or currency converter with a conversion factor. So usually they could be a straight fixed bond, but then they have these conversions, which is basically when you're talking about equity, it's known as equity kicker. The conversion is at a predetermined equity rate when you're comparing it to a bond. So this is a very cool concept. Another type of bond is known as covered bond. Now this is one of the most important bonds when you're looking at the European market. The total European market, if you're looking, it's about euro 2.576 trillion dollars. Now they are one of the biggest players in this segment was Germany, but now it's Denmark. They are very close to what is known as mortgage-backed securities. The only difference is here they are backed by a cover pool of assets. It could be residential, commercial, or public sector loans, but these loans actually sit on the balance sheet of the banks. So basically the bondholder has a right to those pool of loans, as well as they are with the bank. So in case the bank is going through a default, then the bondholder has a right to these particular loans. So these are very important. The covered pool of assets is dynamic, unlike the mortgage-backed securities we talked about in the US specifically, which are static. The covered bond markets is dynamic, and the pool can change over a period of time, and the assets always remain with the bank. Now, when we look at this segment, this is the figures which I got. So Denmark has got about 15.8 if we are looking at the outstanding covered bonds by country. So this is predominantly, it's basically a global market, but dominated specifically in Europe, and it's been there for a very long period of time. I mean, the history goes back to